Good evening or good afternoon for US. Hi, Fred. Hi, Francesco. How are you doing?
Hey guys, Alessandro, Francesco, how's everything?
Good,
Hello,
good.
everyone. Fine.
Fred, very happy. We're very happy to have you on stage for one of the episodes. We had made so many space together from I think from January, so it would be great also to summarize
Definitely.
what happened in the last months. Maybe we can start with you describing your path. I remember in several spaces you said that you started to tweet about Bitcoin in Q4 2023 when the likelihood of the Bitcoin Spot ETF approval was higher and higher, and you moved from I think 5,000 followers to more than 65,000 in such a short time. So it would be great if you can discuss about this journey.
Yeah, sure, Alessandro. So yeah, I wasn't, I've been a Bitcoiner for a while, but I've not been active on Twitter at all until December of last year. And I just put out a video and I didn't think anything of it. And then I got a ton of likes on it. And it got retweeted a lot. And then and my only point really was that I was convinced that the Bitcoin ETF was going to be a big deal, and I kind of felt like the Bitcoin community wasn't really aware of it, and I also felt that the Wall Street community was underestimating it, and I still feel that way. I still feel both of those two things. Well, I'd say the Bitcoin community is more aware of it now. I still think the Wall Street community underestimates its real impact. And yeah, so I just made that video. It sort of took off, and I sort of thought, okay, once they accepted the ETF, I thought, okay, maybe I'll just stop posting much on. And then I kind of realized it was, I might have some more to say with these power laws and a bunch of other stuff. And so, listen, I'm supportive of everybody doing all this stuff on Bitcoin podcast. I'm supportive of what you're doing, and and Giovanni on the power law stuff. So the more the merrier. I think it's great that a lot of people are chronicling these ETFs, and so yeah, so I'm happy to participate. I'm happy to encourage anybody doing this stuff. Listen, I'm a Bitcoiner. I love Bitcoin, and I love the journey of Bitcoin, and I got enough time so I can participate in this, and yeah, that's kind of where I am right now. So yeah, so right now I've got about 65,000 followers, and I started a YouTube, and I got 12,000 followers on my YouTube now. So yeah, that's kind of how I measure my kind of my following.
A great result so far, and also considering that the followers and the YouTube, it means also there is also a big demand. Many people would like to know more and more about how institutions are reacting to Bitcoin ETFs. I agree with you. I also, once I start to hear your podcast, your interviews in November, December, I thought also would have been a great resource your account in X and your post. Also because it's not so much the ETF, then we can discuss more about this, are not so much for people who are already into Bitcoin, who are in Bitcoin since years. It's mostly for institutional money and new joiners for 2024-26. In 2024-26, that maybe they don't want to learn self-custody, they just want to get exposed in Bitcoin. So as a first step, they can join with Bitcoin ETF. We can elaborate on this.
I think the thing you're pointing out there, which is really the, people, if you've been around crypto and Bitcoin for a long time, you sort of forget how hard it is to get started, right? And I think what you've just outlined there is that the Bitcoin ETFs are a very, very good first step for people, right? if you've never set up a wallet ever before, and you've never, bought Bitcoin on Coinbase, or, maybe more recently on something like MoonPay or something, you don't remember how hard it is. And, certainly as you get into sort of an older demographic, people over 50 are not going to be setting up, cold storage wallets and drilling their seed phrases onto steel plates. I mean, it just is not the way that this is going to happen. So, I think that there's a reality check there that, this is not how institutional, and it's institutional money, but it's also just retail investors. Most retail investors are not going to be using cold storage and steel plates and all the rest, and multi-sig. So, while I use those things, it's not for everybody. And I think that's what I think we're looking at, is we have this new means of access, which is these ETFs. And these ETFs are really for everybody. This is the best way for the average Joe to buy Bitcoin, I would say, because you need money to buy Bitcoin. And where's your money right now? It's in Charles Schwab. It's in an account like that. And if you have such an account, it's very easy to, at least it may not be easy to get to the point where you want to do it, but technically it's very easy to buy now IBIT or BITB or whatever it is that you want to buy, or Fidelity. There's lots of different options. They're all good. But it's just, we've removed that barrier. So I'm thrilled that barrier no longer exists. And for the average starter, it's not to say I don't think self-custody is a great way to go. I still do, but I think it can't be emphasized enough how important that is, and people just still have forgotten about that. And so I think 2024 is really in terms of the accessibility of Bitcoin. And it's not just institutions. Again, it's retail investors. It's the average investor, the average stock market investor finally can buy Bitcoin. And that's what I'm excited about, more so than, some pension fund buying Bitcoin. I think the most interesting and important thing is the average American buying Bitcoin.
Just to light up the conversation a bit, do you think that the recent approval of ETFs and the subsequent crackdown on self-custody is a coincidence, or is part of the same agenda? Maybe at a very high level, to protect investors by enhancing the market more, to show them that if ETF is the way to go, and to pay it to the banking system in a way. And so it's not a case that self-custody is being targeted right now. What's your thoughts on that?
Yeah, I don't know if it's exactly cause and effect, but I would say that I think that the Bitcoin ETF has gone better than people expected, right? I think it's gone better than Gary Gensler expected and Elizabeth Warren expected. So it wouldn't completely surprise me to say that, there's a backlash because it was so successful, that they're like, oh, maybe we should now counteract that a little bit by coming down on self-custody wallets and so on. I don't think it was necessarily done as a means of, providing an alternative to self-custody. I think it's more like it got through because of this, GBTC legal situation, and it was sort of slid through, and they said, okay, we'll put it out, and maybe it won't be that successful. And look, initially, it didn't look like it was going to be that successful. I mean, I think if you look at the month of January, it was, a lot of people were very doubtful as to whether it was going to even amount to anything, right? I think now it's pretty clear that it did amount to something as very, very significant. But I think the month from February on, I think it has really shocked a lot of people, including people at Bloomberg, right? I think it's exceeded their expectations. And since it's exceeded their expectations, I think right now there's a little bit of okay, let's do some damage control, and let's make sure this doesn't go too far. And I think, part of the first step there is let's make sure that this ETH ETF does not get accepted, right? I think if you go back to like January, Bloomberg was saying that 70% shot of getting an ETH ETF accepted. And now that it's essentially zero, right? And so I do think that the fact that the Bitcoin ETF was so successful and such embraced by BlackRock and embraced by at least so far by a lot of retail investors, I think it tells you something that now they're going to crack down further on anything outside of that area. So I agree with you to some extent, but I also think it's a reaction, not the opposite of reaction, proaction. Yeah.
Yes, I think it had an influence on the price, by the way, because we are hovering around 60K, and then during this war against self-custody, and it's leveling off. If there wasn't, it would have been over 80K, 90K, we don't know, but it's very likely because it's a negative news at the end of the day. I agree with you. It's like they didn't expect that, and now they try to push the ball under the water for a while, but we all know that there's not much they can do. That's I completely agree with you.
On evaluating the ETF, Fred, as you said, even Eric Valkunas and James Seifert said many times that even it was more than what they expected, not only for the first weeks, also because in the first weeks the price goes down and for the inflow, but because after 3, 4, 5, 7 or 8 weeks, the inflow was still coming so high. And Eric also said he gave from 1 to 10, he gave 10 because he was impressed by how much inflow we had still after 6 or 8 weeks. Plus, we had Larry Fink, I think a great advertisement, said in TV that IBIT was the fastest growing ETF in the history of all ETFs, and there have been more than 3,000 ETF since 1990. So
yeah, win. I mean, that's the best description. That's the best advertisement ever. But also, I mean, look, I can't remember who put this stat out, but if you look at of the top 10 equity ETFs, the Bitcoin ETFs have taken in 20% last week of all the inflows into the top 10 equity ETFs, right? So, and that number was 40% kind of before March 15th, kind of when the flows were big. So, look, I mean, it's a very significant number. It's somewhere between 20 and 40% of all inflows are coming from these Bitcoin ETFs. So it's enormous, and I think we're just at the beginning of this, and I think it's going to be enormous going forward. I think the one thing that I think that it's clear is that it's not a one-way cause. It's not like we've got this demand at any price from Wall Street, and I think there's a feedback loop, right? And so when Bitcoin hit a peak at 73,000 and then dropped, I think a lot of these inflows got cold feet, right? And it wasn't that everything was just from the inflows. No, I think there was a peak. It caused the inflows to stop, to go negative. Now they're basically back to zero. But I think this is, it's just like any other investor, people, Wall Street will chase bull markets and will panic on bear markets to some extent. It hasn't really happened yet. We're in a bull market, in my opinion. But I think, if Bitcoin starts moving aggressively higher, I think now you have retail America, which is mainly what it is, right? You have retail America has a vehicle in which to participate in that rally. And that's what I think is the most important, because, I think if you look at, going from Bitcoin 100,000 and beyond, you're going to need access to big pools of money, right? We never have had these kind of pools of money that have had the opportunity to invest before. That in 2020 and 2021, it was the fund flows, the total amount of money that could go into Bitcoin was a lot less. And a lot of that money was much more interested in going into Solana or yielding products, right? Than it was in going to Bitcoin. So I think right now there is an opportunity to really drive this market much, much higher, whereas I don't think that opportunity was there in the previous bull market. So I think it could be really fantastic for Bitcoin, but I don't think it necessarily means we go up immediately. I think it means we have an opportunity to go up, once we reverse out of this trough that we're in right now.
Agree. And we will see once it reaches maybe 80 or 90K, because it will be price discovery prices that we have never seen. So maybe the narrative also will contribute to shift. And I think, as you said, there were also many retailers so far. I'm also convinced that many other retailers didn't buy yet, but are paying attention to Bitcoin. Maybe last years they were not paying attention, but now that the ETF was approved, many they needed the legitimization from the institutional world. It is there, and now they are following Bitcoin, maybe buying just a bit, and maybe once we see more and more institutional money flowing into Bitcoin ETF and price going 80, 90 or 100K, they will be ready to deploy money. Also because now it just needed, as you pointed out many times, it just 2 or 5 minutes to be exposed in Bitcoin. Every US investor has a brokerage account or can call the financial advisor and saying, give me 2 or 3% in Bitcoin. So it can go quite fast.
It can happen really quickly, right? So, I think, one of the things about these rallies is, you go back and you look at the prior, the 3 big bull markets that we've had, which are, 2013, 2020, and 2013, 2017, and 2020. In those 3 years, all the action really happened over a 3 or 4 month period, right? So the real question is, first of all, is that pattern going to continue? Are we going to still see just this massive move over a 3 or 4 month, let's say maybe even a 6 month period, or is it going to be much more of a trickled in scenario? I tend to think that history will repeat itself, and I do think that we're kind of due for some kind of a giant move up. And by giant move up, I'd say 3x move up over a period of 3 months. I know it seems crazy, right? But, going from, if I had to guess, how do we get to 200,000? I don't think we just grind up to 200,000. I think we do a whole lot of nothing, and then all of a sudden everybody gets the idea that they have to be in Bitcoin, and then there's no sellers of Bitcoin, and all of a sudden we're going from 70,000 to 200,000 in 90 days. That's kind of like, if I had to guess, that's where it is now. I just, what will it take to go there? I don't know. I don't know if it's predictable. But what I do know is you can't be out of Bitcoin and try to see some signal, because if you're out of the market, you're not going to get, nobody's going to telegraph you that this is the time to get in, right? That's it's really almost impossible to make that call. So, I think you just got to be in it, and you got to be patient. But I do think that the market move is going to be quick. That's kind of my gut feel. I don't know when that is. If I had to guess, it's in the next 18 months. That would be my back of the envelope thing. I would say sometime in the next 18 months, we're gonna triple, and it might be, for example, after the election, right? So I could see a lot of if, for example, if Trump wins the election, which I kind of expect at this point, Trump to win the election, that might happen in November, right? We could see Trump wins the election. All of a sudden, it's like, okay, Fed's going to ease. We're going to have a new Fed chairman. We're going to have a new SEC chairman. We're going to have better business conduct, more pro-business stuff. I think that could be maybe that's when it happens. So if Biden wins the election, I still think it could happen. Maybe it's a little later. Maybe it happens before the election. Right now, if I had to guess, I would probably think it happens after the election, though. That's just my guess on timing. It's just a complete guess, right? I think we might go higher before the election, but the explosive move up might be just after the election, which happened in 2020, right? So it was after the election that it really happened.
Isn't the announcement of the U.S. president to veto any financial firm change of law to allow them to custody Bitcoin at this early stage after the ETF, maybe part of that kind of action-reaction movement, kind of chain of events we were talking about before, and is that concerning for the rise of the price of Bitcoin? Because at the end of the day, if you are in the beginning and they are acting with such a bold moves, actually, and maybe what are they going to do when it reaches 250K? So if that's the reason, I don't know. It's a bold move. The announcement of the president, the veto is not politically a mild argument, I believe.
Yeah, Francesco, I didn't completely catch all of that. Maybe Alessandro, you could kind of translate a little bit of that, because it was a little muffled. Because just because
no worries. Maybe my mic, right? I mean, the U.S. president said that he would veto any financial firm a change of law which would allow financial firm to custody Bitcoin. I don't know why he did that, but we can agree it's a bold statement. So also from a political standpoint, isn't that going to repeat itself as a move in the future, alongside the rise of the price of Bitcoin? Are you concerned for such political moves going ahead?
Right. Well, so what you're saying is Biden, anti-Bitcoin? Yes, Biden seems to be somewhat anti-Bitcoin. As just purely on the basis of a Bitcoin owner, I think that Trump would be with all his warts, right, and he has a few, would be much better for Bitcoin than Biden, right? Anybody who says that they're going to veto banks owning Bitcoin could also be pushing other legislation that is very anti-Bitcoin, right? So, there's all kinds of things that they can do that are anti-Bitcoin, but at the end of the day, we have an ETF, we have the demand, and people are going to vote with their own pocketbooks. And so, we don't need banks that's not necessary for the Bitcoin argument, for banks to custody Bitcoin. It's just a sort of an unfortunate thing that this president and his cadre of people have chosen to attack crypto and Bitcoin. I think it's a really bad decision from this administration. This shouldn't be a partisan thing. But the Democrats have made it into a partisan thing, and because the Democrats are against Bitcoin now, the Republicans are sort of pro, and I think it kind of makes your decision as a U.S. voter a little easier. I think, if Bitcoin matters to you. No, it doesn't matter to most people, but to some of us it matters. So that's kind of where I am on that. I agree with you. There's a lot of stuff coming out of the current administration that's troubling. I think the stuff on non-custodial wallets or they call them self-hosted wallets is troubling. The fact that they're going after Uniswap is troubling. Not that I'm a user of Uniswap or really have any financial ties to it, but listen, I think this is you're going after a smart contract, and you're trying to accuse the dev teams and the operators of that service with money laundering and all this stuff. It's disturbing to me. I'm not in favor of that. In general, I would say, even though I'm not a fan of Ethereum, I'm also not a fan of the SEC coming down on, and just regulating everything either. So, I think there's a lot of things not to like with the current administration, and hopefully it gets cleared up. But I don't think it's critical for the none of the stuff's critical for the success of Bitcoin. Bitcoin is going to succeed regardless of who's in charge, and it's going to succeed regardless of the laws. It could even succeed even if even if they outlawed Bitcoin in the US. I think Bitcoin would still succeed. So that's how convinced I am of its sort of inevitability. But obviously, I would prefer if it's not outlawed in the US and in fact that it's endorsed. That would be my preferred choice.
I completely rule it out. We should have adversarial thinking. We should observe 100% of the time, because at the end of the day, if Bitcoin succeeds, the US dollars is suffering, and not beating around the bush from a mathematical standpoint. What do you think?
I mean, look, the dollar suffering, that used to mean something different, right? So it used to mean the dollar's going down relative to the euro or the yen or something. And actually, I think we're in a different kind of world right now, because every single country is doing exactly the same thing as the US. Larry Lepard put out a post today about China's money supply, and they're doing everything we're doing, but even worse. So it's Europe, as you guys know, is not they're not particularly responsible either. They're printing money like crazy in Belgium, and so I don't think that it's a question of the dollar. I think it's a question of is fiat currency, is inflation sort of here to stay, and is it going to go higher? And can we get away with stuff like printing money with no consequences? And I think we're seeing that there are consequences. You print money, you get inflation. I think that's it's becoming very clear that that's the case. And whether you're printing dollars, yen, or euros, or yuan, it doesn't matter. Your excessive printing will lead to inflation. And so I think that's the real capability. That's the real question: is can the US, is there any way they can get away with this much longer? And I don't think they can. It's not like the dollar is going to go down relative to other currencies. I think the problem that the valve that the thing that's going to go wrong is inflation, right? And whether it's CPI or houses or Bitcoin or gold, something's got to give in this equation. And I think What's going to give is inflation, and I think we're starting to see some of it. We saw some of it 2 years ago, and now we're seeing it has not been solved. It's not, and so the big problem is nobody is trying to act responsibly at all. The adults have left the room. We've completely given up on balancing budgets. And, my gut feel is I would rather see them balance the budget than to even fight inflation, personally. But I know they're not going to do that. So given that they will not fight inflation, that they will not balance the budget, given that they will not do that, I fully expect Bitcoin to go ballistic, right? Because at some point, people are just not going to trust their own currencies, and their own currency could be the dollar, it could be the euro, it could be the yen. It doesn't matter. People are going to start looking for hard alternatives, and I think that's the inevitability. It's like, do you want paper money that people can print, or do you want hard money that people can't print? Your choice. You can do whatever you want. I'm pretty sure that most people are going to vote with their pocketbooks, and there's going to be, they're going to vote Bitcoin. So that's what I think it's an inevitability, and it doesn't really depend on legislation.
But also, Saylor said, we have a word for people who save in cash. We call them poor. Maybe they are not poor yet, but they will become also poorer and poorer. I agree that there will be printing of money for sure. Several reasons. First, there is no chance to balance the budget. They are spending, US is spending 6.4 trillion per year, and the revenue is 4.6, so 1.8 trillion, and it's impossible to balance. To make things even worse, the interest of the debt is increasing. Like 2 years ago, it was 600 billion. I think James Lavish said that for next year is forecasted 1.6 trillion, and last year it was 1 trillion, because different from the 1970s, it is another obstacle higher, another obstacle. Like in the 70s, in the 1970s, if they increased the interest rate, they would have bring down inflation, because most of the printing money was with fractional reserve banking, and the debt was small. But now we have such a high debt that increasing interest rate, it increased the interest also on the debt. So it's not clear that it's not so clear that increasing the interest rate is a deflationary tool. It's deflationary because it decreases fractional reserve banking, but it's also inflationary because the debt, the interest of the debt is increasing. So the one way is debt increasing, printing money.
But look, they weren't balancing the budget even when interest rates were zero, right? Even before COVID, okay? If you look at 2018, 2019, they weren't balancing the budget, and interest rates were zero. So you can now say, well, they can't handle the debt, but we were running $1 trillion deficits, before that, right? Now it's 2 trillion, pretty soon it'll be 3 trillion. But the reality is it's we just have gotten to the point where we can't politically balance the budget. So I fully expect Trump will eventually cut interest rates to zero if he gets in. But I still don't think we're going to balance the budget, because it's just that there's no political will to balance the budget. So something has changed in America where there is no political will anymore. We can't run a reasonable operation anymore. So any business like this can't survive. But the U.S. it's been given a free pass, and Europe. Fiat world has and there sort of is a competitive budget process right now, where China is printing money. So in order to combat China, on economic fronts, on defense fronts and everything else, we're going to print. So it's almost like there's an arms race for how much we can go into debt. That seems like what we're headed to. So I just don't see that fiscal responsibility is not on the menu right now. So we're going to go completely insane for fiscal irresponsibility. And, you know, Bitcoin has only one direction that it can go up. People are going to realize that. Now, I don't know when people start realizing, like on a day like today, that, you know, we have an inflation print, and they, you know, we got to move to the point where Bitcoin's viewed as a risk, you know, a solution to that, not a, oh, inflation's high, so I should sell Bitcoin, right? There's still a lot of people who think that way, you know, and I think that, you know, day like today, you know, gold is up a little bit, but, you know, Bitcoin's down. And so, you know, clearly the thinking has not moved to the point where people are like, okay, inflation's high, therefore I need Bitcoin. You know, we haven't made that step, but I think we will make that step. And I think, you know, over the next 5 years, I think it's going to be very clear that you need Bitcoin to protect yourself from inflation. And, you know, the real question is, yeah, Saylor did say that about, you know, the people who put their money in fiat are poor, but, you know, there's a lot of other areas that you can put your money that are not in fiat, but which are also not great, right? And they're, you know, they're denominated in fiat, like most stocks. Most stocks have not done that well. You know, the top 10 stocks have done well, but most stocks have not done very well. And, you know, most stocks did not do well in the 70s at all, right? When you had high inflation. So you didn't, if you go back to the 70s, did people put their money in cash? No, they didn't. I mean, to some extent they did, because the interest rates were super high. You could get 12% in a money market account. But, you know, people put their money in stocks, people put their money in real estate, and stocks did not do very well in the 70s. So, you know, I think people are deluding themselves that they can hide out in stocks and that they are, you know, they can protect themselves from inflation. And I think this is just a false premise. And I think, you know, I think that's going to be tested, and I think Bitcoin's going to look very good relative to stocks over the next 5 years. That's my view.
Saylor said that the role of the bank will be of vital importance at the end of evolution of the asset, especially in terms of ETF, because at some point people will like to borrow against it and to use it. So, you know, so it's not the best way to hold the Bitcoin. But, I mean, without the private keys. But so to this regard, can the delay of the banks in Bitcoin adoption be friction to the rise of Bitcoin going forward? And also, what do you think about the different players in the market talking about insurance? We nowadays a spot insurance who commit something to Bitcoin. Then you have some family fund, family office who's thinking about it. Maybe is the most difficult entity to convince. Also, other institutional hedge funds. Do you have at least not scale how difficult it is for each one of these company to commit something into Bitcoin according to their profile risk?
I got to tell you, I am not a believer. I believe that this is going to happen from the ground up, not from the top down, right? So, you know, it's sort of like, if, you know, I've seen so many examples in my life and stuff. I'll give you a kind of example. There was a company I sold my second company to this company called Vignette. Was a small startup in Texas, right? And you know, one of the companies that right before selling it to Vignette, I talked to one of Vignette's competitors, which was much bigger and much more established, and they were like, Vignette's just a tiny startup, you know, they can't possibly compete. It was very similar to like a Blockbuster Netflix. Anyways, Vignette, this other company went out of business. Vignette ended up being the top performing stock on the NASDAQ in 1998. 1990, yeah, 1999. It was the top stock, or 98 or 99. I'm not sure of the date. It went public in 98. And so, look, you know, I think when you look at these flows, and yeah, there are some names, some insurance companies. Today we got the Wisconsin, but right now, I think what's really remarkable is that a lot of these big names have almost no exposure. The Rothschilds putting in like $6 million or something. It's like these are tiny amounts, right? And so I am not convinced that this thing is going to happen because of hedge funds or really rich people or this or that. I just don't see that as that's not mathematically what's going to drive this. What's mathematically going to drive this is retail America. People who own the Vanguard, the Vanguard Index Fund, the people who own the QQQs, people who own, retail savers. Those are the people who are going to drive this market higher. It's not going to be some giant fund. Now, are these people customers of Fidelity? Sure, they're customers of Fidelity. They're customers of iShares, right? But what's going to drive this market up is it's from the bottom. It's from the bottom up, right? And it always has been. So I don't think we have to sit there and say what billionaire is going to buy it next. We're past that point, right? Right now, what's going to matter is it's a million people investing $1 million into it, or 1 million people investing $500,000 into it. That's what's going to drive this thing higher. It's really going to be a broad-based market push, and that's the way change happens in this world, because the established world order, these banks and these financial institutions, they are fighting it. They still don't trust it. They don't believe in it. You look at super high net worth people; they're ultra diversified. They're maybe going to put in 1%, 2%, 3% max into Bitcoin, right? But you have to. It's going to come from the population. So I am not a believer that this stuff comes from any giant institution. I think they're going to be the last people to buy it, and they're going to buy it much higher, right? So they'll buy it at 250,000. They're not going to buy it from 60,000 to 250,000. So right now, for the next part, this is going to be the masses that buy it. And Bitcoin right now is pretty. It's owned a lot by For example, it's not owned so much by white people. It's owned, if you look at the ethnic thing, it's young people and black people and Asians who own Bitcoin, not old white guys like me, right? So that's just a fact. So it's this is a changing of the guard, and I think the guard's going to change from the bottom. And El Salvador is a perfect example of that. They're going to do great because they went all in on Bitcoin, and they went in early, and they're buying a Bitcoin a day right now. And that's every country should do that. Now is Nigeria going to do that? I don't know, but that's more what I'm looking for right now is what do the smaller countries do? What does the average guy in the street think? And I think right now the average guy in the street is sort of starting to think, wait a second, I could actually get out of this mess. I can get a lifeboat out of this mess if I just go all in on Bitcoin, And I feel like there's a bunch of young 30-year-olds right now who are making that assessment. And they're sitting there going, you know what? I should go all in on Bitcoin. And, and if this thing works, I'm going to get out. I'm going to be able to, afford my own place, have a family, and have a reasonable shot at a good lifestyle. But if I don't go all in on Bitcoin, I'm just going to get chewed up by the system. And I think that's, I don't want to sound pessimistic, but there really is a lot of a lot of things going against you right now if you're 30-year-old and you don't have some kind of Bitcoin plan, in my opinion.
Yes, I agree on this, Fred. From the retailer perspective, I would say also the biggest chunk will come from maybe wealthier retailer or middle wealthier retailer. When I also refer to pension funds or insurance funds, I'm not referring the pension funds buying, but mostly that the people who have this have money in this pension fund decide to move from S&P 500 or from Vanguard to Bitcoin as a small percentage. And I think also, as you said, it will be gradually and then suddenly. There was Hunter Horsley in the conference from Saylor on Bitcoin for Corporation, and he was saying that many financial advisors, they are asking, they are doing the due diligence, offering Bitcoin, but they don't want to be known. They don't want this to be known because they are still afraid that they don't want to be the first or among the first row. But so human being does want to generally to be in the first on the first row, because if in case they could risk their job yet still, but they don't want to be also in the last row. So once it will be agreed that 1, 2, 3% in Bitcoin is recommended in a balanced portfolio, there will be also a rush of all these financial advisors recommending to the retail world, and then the retail world will start to flow much more money into Bitcoin. Maybe that is also connected to what you say. In 3 months, we could go from 70 to 200. I will foresee that will be one of the trigger.
Yeah, I kind of agree with that. I mean, I think that's a reasonable way to look at it. I mean, there's a lot of sort of people just dipping their toe in there right now. But I think that's just, just a little sliver of a sliver. They're not really committing. There's no commitment from these guys at all. But I think that the retail is starting to develop some conviction. And that's what I think is, and that's a little bit where we can kind of play a role, right? We being Bitcoiners, on places like Twitter, right? Because all these retail guys are going to want to get some second opinions, right? If they see something on Fidelity or BlackRock, they're going to poke around, they're going to do some research, and they're going to find somebody like you or me or, and any of the number of people here on this space. And they're going to be like, let's listen to Alessandro, and let's listen to D++ or Fred or Wayne or Thomas, or Lisa, and they're going to do some research. And I think, if we can provide an unbiased and clear perspective on this, I think it potentially could make a difference, right? And it's kind of like, that's kind of my where I sort of see our role, right? Is like, it's a little bit being the apostles, for this new religion. So I'm sort of like, Paul the apostle walking the earth and converting, just, like, hey guys, have you thought of Christianity? Like, not that I'm like a hardcore Christian or anything, but I just think kind of from an analogy, that's a little bit, people need other humans to kind of guide them through this process, right? And you look, it's sort of like you need whatever resonates with you. Is it another person exactly your age, or is it is it somebody older or younger or whatever it is? But people react to other people arguments for why do you buy Bitcoin? Why are you holding it? Why are you so adamant about it? And it very much is kind of a religion. So I think that I think that's how this thing is going to spread. Up until now, it's been like, great, Fred, you like Bitcoin, but I'm not going to go open this wallet and remember these words and everything. It's too complicated. So I think what's great now is all of a sudden we have this thing is like, okay, what you're saying makes sense. Like, for example, I'll give you an example. So I was showing a friend of mine a younger guy, right? It's a guy in his mid-20s, right? And he's a graphic designer, and I showed him the proofs of my book, and he's like, I go, what do you think? And he goes, well, you know, he goes, I've heard you talk about Bitcoin, Fred, and stuff, but like, I'm looking at this book and I go, now, it's clear to me, why wouldn't you want to buy Bitcoin? It's just like such a clear, you make such a good case for it. And I totally get it now, right? And so I think that's what we can do, is we can make the case for Bitcoin through whatever means that we have of expressing it, right? And if we can make a really great case for Bitcoin, you know, I'm not saying we're going to convince 100% of the people, but if we can make that case on social media, I think we have a chance of influencing somebody. You know, you don't know who you're going to influence, but somebody might listen to this podcast and say, who are these guys and why are they so convinced of it? So, you know, I think what I think is important is really laying out why Bitcoin is important. You know, why Bitcoin and not crypto, right? Why is the specifics of this particular setup and this coin and this history and all that, why is that significant? You know, and then be able to respond to all the arguments that everybody has about Bitcoin, which are all, you know, there's like 10 arguments, you know, okay, well, aren't the government going to shut it down? Isn't it this? Isn't it that? You know, what's to stop somebody else from creating a new Bitcoin 10 years? What about quantum computing? Isn't that going to break it? So, you know, just getting all this stuff out there and educating people, I think, and for them to see that, you know, yeah, we've thought through it all. We understand all these things. We understand the volatility. We understand all of this, and yet we're in it, you know, and not in a little way, right? We're all kind of pretty big in it, you know what I mean? And it doesn't mean that, you know, not everybody has, you know, hundreds of Bitcoin, but, you know, you might have a Bitcoin, right? And that might be really big for you. But that's, you know, that's you know, people respect other people's passion and their authenticity. And that's kind of been, people ask like, Fred, how did you get so big on Twitter? And I'm like, I'm authentic. I'm not bullshitting. I'm telling you kind of the way I am. And I said, like, if you want to be, you know, you want to get big on Twitter, have something to say and be authentic about it, and you'll get pretty big. That's kind of my advice to anybody on Twitter. And, you know, Twitter needs more authentic Bitcoiners, right? So there's not a competition. It's not like who's going to be, you know, the most authentic. It's just like we need more authentic people to tell their story and to clearly tell why they think, you know, this thing is a good place for them. It's a good bet, you know. Ultimately, it's like, you know, you're going to be risking very real money, and, you know, and I don't take this lightly too, because look, we could have a drop. People could lose a lot of money, but at the end of the day, I think that, you know, doing nothing has also all kinds of risks, right? So, you know, people recommending the traditional 60-40 portfolio, it's dangerous right now. It's dangerous to have 40% of your money in U.S. government bonds, right? I think so. So that's kind of where I kind of look at this right now. I do think that there's significant risks of doing the same thing right now, and that's why I'm, you know, having said that, I do think, you know, look, this stuff is very volatile. The volatility will drive you crazy. So, you know, you really got to prepare for this, and you got to get mentally tough. And that's part of the thing that we can convey in these spaces and other ways. Is just, you know, get ready for the ride of your life, because it's not easy.
Yeah, it's so happy to hear that you foresee adoption of bottom up also in the financial sector for retail, and we have the confirmation of what you said by looking at the major buyers of the ETF, which are indeed the retail. And so if we have to find a reason why these insurance family offices, firms, institutions will not jumping in at the moment, and as you said, the retailer will get interested and have the real FOMO, the real incentive, because at the end of the day, it's their money, it's their life. It's maybe because these institutions and firms, and they work for management, so they have more risk than they see more risk than opportunity. For them, the risk is greater than the opportunity of earning more. They are focused on not losing or giving something and taking their fee. Do you see like me or not?
Yeah, no, I see. I agree. Look, I mean, everybody, if you're an advisor, the only thing you want to do is you basically want to hold the client's hand, and you want to kind of have some middle of the road position, right? That doesn't get you in trouble, right? That's what these guys do, right? Because do they actually provide that much value add? I don't think so. I mean, you don't need one, you don't need a psychiatrist either. You can kind of, you can live your life without talking to a psychiatrist every week. But, where I live in LA, everybody seems to have some kind of therapist, right? Life coach, they call them here, right? So everybody has a life coach, and you don't need a life coach. You can get through life without a life coach, and you could do just fine by managing your own money. You don't need a money manager, you need somebody to file your taxes, but you don't need one. So I think that there's this whole class of people. I mean, the financial world is, as you guys know, it's like something like 18% of the U.S. economy. It's just is financial. It's absurd, right? We have a ton of intermediaries. We have a ton of people advising other people, managing this process, and ultimately none of it's needed. I mean, it could be down to 1%. But that's just the way people are. These advisors are ultra cautious, and that's why they're really kind of, they're on the way out, right? They're all going to be replaced. And, at the end of the day, I think it's Bitcoin sells itself, though. It has just great returns. We have a great community of Bitcoiners, and we don't need advisors. It's like, at the end of the day, if the advisors don't get it, so what? Fire your advisor. That's kind of what I would say. I think the wrong attitude is to say, we really got to wait until all these advisors get on board. We got to pray that the advisors get it. Yeah, advisors will get it. But like, even at the very beginning, I definitely thought that the retail was going to get this thing first. And, a lot of people were really bullish on all these advisors. And I do think, in time they will come. But, right now, look, it's about retail. That's what I think it is. And yeah, so I hope that I've said something of some use to somebody somewhere. But yeah, I got to hop though, Alessandro. I have a 12 o'clock. But it was great talking to you guys.
Yeah, definitely great insight, Fred. Thanks a lot for the participation, and
yeah,
we will.
And guys, continue your good work, guys. You've done some great work on the spaces and everything else, and I wish you guys great success on Twitter and YouTube and elsewhere. And you guys are great. And if I ever do when I do my next space, you guys are always welcome, as well as everybody else on this podcast, to come in and speak. So really enjoy your value add to the Bitcoin community. So thanks a lot, guys.
Thanks, Fred. Thanks. Again. Very happy to join your space in the future, as I was doing so far. Really great. Francesco, you want to comment on the last point from Fred? Then I can also continue. Maybe we can continue a bit.
Yes, maybe for 1 minute, it would be interesting for the audience if you can expand very quickly why are the bonds risky especially the 3 months bond T-bills, doesn't it give enough time for the people to see them to complete the 3 months and then take the capital back, or is there still risk because they're yielding 5.3%? So somebody can think it's a great bargain. What do you say? I think he's not here anymore. Anyway, would have been a question for another.
Yes, maybe for the next space. Some comments of me on what Fred said. There were many great insights. Firstly, once we reach, it's not only, so the good thing is it's impossible to unlearn Bitcoin. So there will be more and more Bitcoiners. And Bitcoiners generally want to provide good content for what Bitcoin is and the value of Bitcoin for the people. So on one side, the retailers will have more and more access on good content. And I believe once the price is high enough, maybe 100 or 120 or 150, on the other side, all the FUD that we are seeing, and the retailers are getting all this FUD from so many articles, Financial Times, New York Times, Forbes, Bloomberg. That said, there are more and more articles in favor of Bitcoin, but still the majority is against. I think at one point, or will stop or will be significantly reduced, because once the price is 150, 170, Bitcoin is the second asset most valuable, the second most valuable asset in the world, just only behind gold. It will pass Saudi Aramco, Google, Apple, Amazon. So the narrative to still be very against Bitcoin, I think, will be harder and harder. And another point on the volatility, many people mix or they have confusion between volatility and risk. That volatility doesn't mean risk. If you look at the Bitcoin price day to day, for sure it's risky trading Bitcoin. But if you look at the 200-week simple moving average, so the average weekly price of the last 4 years, the curve is a great store of value that is going only up. So more and more people will learn from good content. And this is why Francesco and me are doing this podcast. Francesco, what do you think?
No, I completely agree. It's a process. As I always say, it takes time, but it's well worth it. And I try to exert some adversarial thinking, like today, thinking about the politics and other way to stop Bitcoin, to lower the rate of increase. But I really can't find any true threat, which because politicians come and go. Laws don't affect Bitcoin. Bitcoin in Nigeria was trading at a markup when it was banned. It was banned 5-6 times. I don't know. So of course, tyrannical government they don't like it. So it adds value, therefore, to the society as a whole. But Bitcoin is made of positive energy and is a positive virus. And this world, bad people don't like it because they cannot scam, they cannot exploit it and take advantage of the people. And it has Bitcoin. Okay, it's Austrian economic is value subjective. I mean, but it has an intrinsic value given by energy and time, which underpins all. Of the use case as a currency, as a store of value, whatever according to the own spot, everybody can give as a meaning for themselves in their lives. But it's huge.
Agree. Agreed. We will experience and discuss in our space now every week, or we have like between 5 and 6 episodes per month. Should we go to the closing remark, Francesco? What do you think?
Yeah, I invite all of the audience to follow the host, the co-host, me, Alessandro, and also the store of Bitcoin profile here, because you will find there all the recordings. You're also going to find the recordings on storebitcoin.com, or you have or on the Spotify or Apple Podcast to listen to your convenience. It's just the beginning. I mean, we have an average 2,000, 3,000, 4,000 lists in this space. That is going to increase. Another metric how I track Bitcoin is the number of the followers on the Reddit, on the subreddit of Bitcoin. So that I remember it was 800K. Now we have 7.2 million. That is very telling. Also, the account of the number of the followers, the Plan B account was, I remember 2019 was 60, 59, yes, 3 million. So everything is exponential. And the network effect riding on the internet because of the Metcalfe law is a big slice of the Bitcoin value. As Amazon is the postal market over the internet, Bitcoin is the currency over the internet. And we have seen how this the stocks of Amazon go. So the same I will expect for Bitcoin, and therefore higher prices underpinned by the scarcity, which is the true prominent value of Bitcoin itself. Thank you all for me. See you next time.
Thanks, Francesco. I agree with you. It's just the beginning of Bitcoin, and we will, in the next weeks or months, we will see more and more development. I pinned here the link for the YouTube playlist. You can look at this playlist for all our previous episodes. We have done 6 so far. This is the 7th, and we have a great lineup upcoming. We will have Anthony Scaramucci in 3 days on Friday. Plus, we will have Sam Callahan that is working at Swan, is a macro analyst. Plus, we have James Lavish in May. I think everyone knows him. He's one of the biggest macroeconomics expert in the Bitcoin world. Then we will have also Prince Philip, Joe Brunette, and Gary Cardone in June. The plan is to have at least once a week, one episode per week, and we are targeting also 5 or 6 in total per month, especially if there are special guests. So thanks all for listening to it. We hope and we believe to have provided some other good content. Also thanks to Fred and thanks to Francesco. And see you on Friday for who is interested, where we will interview Anthony Scaramucci. If you cannot be online, you can join. You can listen to it in via YouTube. Thanks all, and have a nice evening or have a nice day if you are in NA. Bye bye.